Welcome back, ladies and gentlemen, to Money Mondays, episode 7. I am your host, the Liberty Guy, and I just want to thank you for tuning into the channel and sticking with us through this whole process. Today is not going to be any different. We have some hot questions that we are going to be answering in depth. So please stick around, like, follow, and share, and always watch the videos to the end because you never know, we might have something surprising in for you. Ooh. Let's go.
Is it just me?
Sign it.
Oh, Monday's looking blue. Monday's looking blue. What do you wanna do with the money? What do you wanna do with the money? Spend it or invest it?
Signing out.
Hey, Mr. Moreki.
Hey.
So I'm one of your clients and I have an investment portfolio with you and I happen to pass away. What happens to my investment and how do you process the claim for my beneficiaries?
That's such a good question. As people, we don't necessarily understand what happens at the event of claim. So much happens, and within the different structures of investments, you need to know how each and every one pays out, right? So I'm going to go into 3 different structures of investments. I'm going to go into the retirement, I'm going to go into the endowment, and I'm also going to go into the unit trust side. So for the retirement side, yes, when you have your retirement, when you make it active and start contributing into it, you do add your beneficiaries. These are the people whom you would like for, in the event of you passing away, they should get the money, correct? Now, in the event of you passing away, it might not just pay directly to them, because now in how the law works, whoever gets money from a retirement annuity fund is whoever is actually dependent on you. So yes, you could add your beneficiaries, but that doesn't necessarily mean that they could be the ones getting the money. Understand this properly. Whoever receives money from your retirement annuity is whoever is actually dependent on you. So yes, you will have your beneficiaries, but whoever's dependent on you is the one who is going to get the payout from the retirement annuity. Then you have your endowment structure. Your endowment structure is the one that I would say is pretty straightforward. When you have your endowment structure set up, you have your beneficiaries, and these are the people that you would like for the endowment to pay out in the event of you passing away, right? So now, let's say you have appointed a minor as your beneficiary. If that's the case, don't worry, the minor is still going to get the money. The only difference being is that now, as Liberty, we'd have to go to your guardian, the guardian of the minor. Ask the guardian of the minor to actually open a bank account for the minor, because according to law, we have to send money into the minor's bank account. So yes, your wish is to actually say, I want my minor to get the money from the endowment. That will play to form. But the only difference is that there will be that little back and forth of making sure that the guardian actually goes to the extent of actually opening an account to make sure that the money goes directly into the minor's account. And then on the last investment structure that I'm going to touch on, it's the unit trust. With the unit trust, you don't have the option to appoint a beneficiary. I'm going to repeat that. You don't have the option to appoint a beneficiary. So if you are going somewhere within any insurance industry and they say to you, hey, we're opening a unit trust for you, and then they say, hey, we need a beneficiary. My friend, that's not a unit trust.
That's not a unit trust.
Within a unit trust, whatever it is that's within the trust falls directly to your estate because there is no beneficiary, right? That's what happens within, claim stage within a unit trust. I hope that makes sense.
Hey, Liberty Guy.
Hey, Thomas.
So I have a life cover. What happens in the event of me passing away? How do my beneficiaries get this money?
Okay. Very good question. And I know a lot of people have that question, especially regarding life policies. So it's very simple. I always start off with my condolences because we understand it's a very tough time that you're going through and you've lost that loved one. But there is a process and there are requirements that the insurers will require. And for starters, we need the death certificate. That is a very important document that will give us an idea of where now we can start the process. Second thing that we're going to need is a notification of death by the professional that announced the deceased being dead. Okay. Then third thing, which is very important, is the beneficiary's proof of bank account, the beneficiary's IDs, as well as the deceased ID. It's very important that we can identify who's been stipulated on those policies to be receiving those benefits. And then lastly, which is very important, you kind of also need to make sure that everyone is verified accordingly. Verification in the application form, verification in making sure that everybody is who they say they are is important. That will help with the whole process. Now, most people then ask the question, how long does it take? And literally, the process can only start once the last requirement is in. Now, as I said to you that we can only start looking at once the last requirement is in order to process the whole thing. Let's say everything is in. It will take anything from 10 days to up to 60 days for actual claims to be paid to your beneficiaries. Now, here's the beautiful part about being a beneficiary of a life cover, ladies and gentlemen. You as the beneficiary holder receive that money tax-free. Yes, tax-free to your bank account, okay? Now, if you're a minor, okay, so that's someone under the age of 18 who's now a beneficiary to a lump sum from a death claim. Now, we can also still protect you. And what I mean by that is, let's talk about the life assured protecting their beneficiaries' vested interest. I'm going to create a scenario right now. I happen to be a single parent, okay? And I have a child who is 4 years old with a life cover of 2 million rand, and I pass on. And I've chosen my daughter to be the beneficiary, and I'm no longer in great terms with my child's mother, but we're co-parenting. And maybe her financial situation isn't the best. And now she's got full guardianship of my daughter because I'm no longer around. And that means she would also have access to the child's bank account. Now, for that reason, I always advise you to sit down with a financial advisor so that we can take you through the process of how to protect your minor's interests when you're no longer there, especially if you've left money being lump sum money for them. And we talk about then, having trusts in place. In our specific world, we're talking about the Liberty Beneficiary Trust. Now, the Liberty Beneficiary Trust is exactly that, ladies and gentlemen. It's there to take care of your minor's interests. So yes, you've gone. Now they've got the Beneficiary Trust, which basically has trustees who take care of the minor's needs financially, and the guardian is now governed and kind of being guided by them onto how to spend the needs for your child. This is also a great way to never have to worry about, I can't make my child a beneficiary because I know the partner or the mother or the guardian will misuse it. Which is also the next thing that makes you have to think about when you choose guardians for your kids in the event that you're no longer there. You really need to know the guardian's financial circumstances. You kind of need to know how they view their finances and how they handle themselves. Because do you really want to leave your children in the hands of someone who's not capable of even taking care of themselves? That's something really, really important to look at. Now, when we speak about, leaving behind an inheritance, everyone always has the preconceived idea of large lump sums of money. Folks, you can take out life policies for different reasons. You can take out a life policy for an inheritance where you can make it an income that will be paid into that beneficiary's account on a month-to-month basis, like an income, or you could split it up and say an income and part lump sum. But what I'm trying to let you know is that 90% of us are in a situation where if we are married, we are a contributor into that household. Meaning maybe you are a 50% contributor because you're living a 50-50 life, or maybe you are the breadwinner. And you're leaving this world doesn't necessarily mean you leave the money behind also, because life policies are created to bring liquidity in your estate, to take care of your beneficiaries, to take care of those who are, needing your helping hand. So I want you to look at life policies a whole lot differently now that I've given you that little breakdown. You're not going to be enriching people and making them multimillionaires. You could if you wanted to leave an inheritance for that purpose, and that's a separate policy. but you can also make sure that when you're no longer physically there, financially you're still taking care of their needs.
Welcome to the end of the show. I hope it was worth the watch. Look, today's questions were pretty much in depth. We just needed you guys to understand more of what it is that you can expect in the event of a claim. Many people go to their claims and try to get money and get frustrated over these small things that we explained, and we're trying to make it a lot easier for you so that you know what to expect in the event of claim. Just like all our other videos, we do have offerings for you. For everyone who has watched until this point, like we said in the beginning of the video, we have something for you. All you have to do is comment down below, Money Mondays, or I need a will, or I need a financial needs analysis. And what we will do is give you one of these complimentary on the house, right? And don't forget, guys, we need those likes. We need those shares. Make sure that you tell a friend, to tell a friend, to tell a friend, to tell a friend. Thank you so much for watching. See you guys on episode 8. And remember, signing out!
What do you wanna do with the money? What do you wanna do with the money? Spend it or invest it?
Signing